Good morning, everyone. Happy Friday. Welcome back to Monica Pite Aiman here. Right. So the S&P 500 slipped 0.51% on Thursday session, driven lower by a sharp retreat in the heavyweight semicon as well as the AI stock. So despite solid backdrop of the corporate earnings and the generally positive economic data, right? So the sheer index weight of massive chip makers drag the broader market down, even though some of the stocks within the index is actually finished the day higher. So at this juncture, right, I think the immediate sentiment shift towards broadening out of the bull market rather than a systematic drop down. Looking at the China A50 futures, will tumble 2.22% on Thursday session as the temporary optimism surrounding the potential economic stimulus rapidly subside. So despite an initial relief rally on the previous session, following the cooler US inflation data, investors aggressively pivoted back to the risk-off positioning as the ongoing leadership meeting in Beijing failed to immediately deliver concrete policy intervention that the market was hoping right now. So for now, we believe that the sentiment is heading into the next few weeks of heavily cautious. Right. Chart wise, I think the overall movement seems to be kept up and also down, with consolidation is likely to stay in the market price action at this juncture. So looking at the WTI crude oil futures, well, it is slightly by 0.85% on yesterday's session or the Thursday session, settling around 79 dollar, right? As traders engage in profit taking following the strong weekly rally. So while the downside was cushioned by the lingering geopolitical tension, anxiety surrounding the tension and also the tight inventory. I think a lack of immediate escalation and a comfortable physical spot market kept any further upside for yesterday's movement. So I believe that now the near-term sentiment is highly reactive and also event-driven. If bullish momentum to follow through, we might see that the price to hit or to revisit the 50-day moving average, which is the blue line right here. So if you look at our local market, the FBM KLCI will rose by 0.49% to close at 70.2 points, while the FKLI closed at higher by 0.47% gains, backing on the massive rout of the North Asia market, right? Driven by cooler than expected US wholesale inflation data that fueled hopes of pause in Fed rate hikes as well. So the local burst, found a strong support, structural support from the aggressive blue chip buying in the banking giants, the plantations as well, and the steady strengthening of ringgit. Right. So overall sentiment remains cautiously, I would say cautiously optimistic as the KLCI successfully absorbed the yesterday's profit taking movement to reclaim its higher level or higher ground. So also this also reflects a highly robust session driven by heavy buying in the FI heavyweights like public bank, the banking names alongside a strong defensive support from the large cap plantation and also some of the commodity counters like the SEG, P metal as well. So while the packet of tech space remains mixed. The mid caps and also the industrial names are seeing a massive individual surge on yesterday, highlighting by the Netgate, skyrocketing by 20%, and also VS by nearly 7% yesterday. Right. So talking about VS, right? Well, we have it in our trading stock for today. But yeah, let's start with TMK Chemical first. So the stock is on its breakout formation higher at 2.30 level. So with that, we expect the bullish momentum to keep strong to retest the 2.55 ringgit level and the second resistance at 2.80 ringgit level. So if the stock to clear the 2.05 ringgit support, this could reverse course and trend lower. And also, yeah, for the VS Industries, the stock is experiencing a breakout as well at 23 cent level. Um, if the stock remains bullish, we are expecting the price to reach 25 cent level in the coming session. Second resistance is at 27 cent level. So, and also do keep an eye at this 21 cent support for any attempt of reversal. Both are breakout stocks, which is TMK and also VS industry. Also, yeah, just now we touch a bit on Netgate, right? So many of you have asked me about this stock, which is Netgate lah. So after the stock rally over 20% yesterday, right? So we observed that it has breached all of the moving average at this moment, right, together with the bullish signaling MACD indicator, where if you see here, the MACD has crossed above the signal line, the negative region recently. So what I can say is, well, the first wave of rally is deemed completed. And for now, I'll be waiting for the pullback to happen. Well, at least towards the 50% Fibonacci retracement level before it continue for the third wave. Yeah, however, we do not discount for any if the stock to continue to upwards, right? Potentially revisit the 1.24 ringgit threshold. So yeah, from what we can observe, first resistance is at 1.24 ringgit. Second resistance is at 1.34 ringgit level. So towards the downside, at this moment, first support is at 1.10 ringgit, followed by 97 cent level for Netgate, right? And lastly, for the crude palm oil, which is FCPO futures, right? Well, it rose 0.81% on Thursday session, finding a strong upwards support momentum from an impressive 4 to 10% surge in July export. So I think the market was further boosted by the energy dynamics as well, as the ongoing tension in US run keep the global crude oil elevated well in general, which also boosting the biodiesel margin and also heavily driving the long-term demand security. But however, for now, we still keep our stop loss at 4,700 level. Unless it breach above this stop loss, then only we shift our negative negative bias to positive bias. Yeah, so I'll stop here and pass you to the next presenter. John, thanks everyone, and happy trading.
Okay. Thank you, Aiman. Morning all. Let me continue with a sector update on energy sector. So yesterday, Petra launched the LSX6 program, offering a total quota of 2.5 gigawatt of solar capacity, together with a 1.25 gigawatt of battery storage system. With the targeted COD by end of 2029, LSX6 comes with three packages. Package 1, open tender to all the developers with 2.2 gigawatt of solar and 1.1 gigawatt of battery. And package 2, open to booming companies with a 300 megawatt of solar and 150 megawatt of battery. And last but not least, package 3 also open to Bumi companies with 150 MW of solar without battery. Given a typical evaluation timeline, we expect the earliest project win to be announced between August and September. And the total project capex could reach 13 to 15 billion ringgit, implying a capex of 3.3 to 3.5 million per megawatt for solar and 4 million per megawatt for battery. While the PPA terms and the project IRR remains unclear for now, we do not rule out the possibility of a lower project IRR at mid-single digit, given the increasingly competitive bidding environment. All in, SolarWest and Semaiden remain our preferred beneficiaries, supported by their track records across the previous LSS programs. We assume SolarWest to secure a 20 to 30% market share, translating into a 2.5 to 4 billion ringgit project wins. Meanwhile, we expect Semaiden to capture a 10 to 15% market share, equivalent to 1.3 to 2 billion project win. This could bring further upside potential to our FY27 on book replenishment assumption of 2.7 billion for SolarWest and 600 million for Semaiden. Other than that, the solar panel prices are trending lower as expected. Based on our channel check yesterday, the solar panel is now quoted at 11 cents per watt by China suppliers, down from the recent peak of 13 cents per watt. We do not discount the possibility of a further pullback, given a softer raw material cost for the PV modules. That's all from me. I'll pass the floor to the next speaker. Thank you.
Okay, morning. We have an update on Telekom Malaysia. Basically, if you look at the stock, it's still fairly positive in terms of outlook. The DC business or the data center business remains underappreciated. We think this line of business will, capitalize the wholesale segment in the medium to longer term. Just some updates in terms of the underlying operations. The C2C business, which is the wholesale business, we think that this will continue to be a key growth driver. First quarter, it was up about 2% on year-on-year basis. I think this number should continue to ramp up over the next couple of quarters. What you're looking at really is that support coming from the local fiberization business. They've got the mobile backhaul on 5G. Basically, DNB is connected to them. U-Mobile, which is a second access provider, is also connected to them. These are all long-term contracts. The other part of it is really the data center co-location and connectivity services. As you know, a lot of the fiber-to-fiber connectivity has to go through TM's infrastructure. So, DC boom and all that, they're getting a bit of the demand coming in from the hyperscalers. Also, I just want to point out that the subsea cables, they're part of a consortium for some of these big, massive developments globally. I think one particular cable that's really coming on stream, towards first quarter of next year is the Asia Link cable, the ALC cable. And there's also a CME 6 cable, which basically goes all the way, from Asia to Europe. That will be commissioned sometime in 2027 as well. So with the commissioning of these two new cables, you should actually see a bit of a leg up in terms of the international submarine capacity, and that should basically benefit TM as a whole. On cost, I think there are a lot of talks towards the end of last year that the VSS, the staff redundancy cost, will be a main feature as well in 2026 and 2027. But I think year to date, the numbers actually been going a lot lower than what management has expected so far. So we think that the VSS costs, obviously they guided that the number may be about 300 million this year, similar to last year. So we think it's going to be coming in lower than the 300 million. So I think there will be some potential upside in terms of the EBIT, earnings before interest tax guidance for this year. I think they are basically reaffirming their flattish sort of EBIT guidance, but I think with that VSS cost coming in lower, you should expect some upside in terms of the guidance as a whole. Unified business, the retail business, is still chugging along. It's sort of a run rate business, if you ask me. 1 to 2% sort of growth, fairly steady there. What they've been doing so far is to basically migrate a lot of the lower end, lower speed subs to the higher end or mid end subs. mid-end tiers in terms of speeds. They've just introduced a home campaign. This was introduced towards late June, basically allowing existing customers to upgrade to a higher speed plan with quite a number of attractive device bundles. So you can actually go along with a mobile plan, or you can take a cybersecurity package, or even upgrade your TV. There's actually a TV bundle as well. And obviously that comes with the content side of things, which TM is aggressively promoting ahead of the in the weeks to the rollout of the World Cup as well. So DC business is something that obviously it's not been well flagged and talked about. I think this is something that will be increasingly more interesting going forward for the stock. I think the market has yet to price in some of this upside from DC business. If you look at data center, they've got two flagship facilities. One based in Klang Valley. It's called Klang Valley Data Center. That's based in Sabajaya. The other facility is down south in Johor, the Iskandar Putri Data Center. I think both have undergone massive upgrades last year. The capacity upgrades have basically doubled their utilization, as well as the IT load. So it's now hovering at about 40 megawatts. In 2023, I think the combined capacity is just under 20. So we think that with the improved utilization, of course, the demand for colos and all that, revenue and EBITDA will be on the DC side of things will be fairly strong. Note that they don't actually disclose the DC contributions per se, but it's fairly small at this point in time. Possibly about single-digit revenue contribution to the group. The other DC side of things really is the JV with Singtel to develop an AI DC. 64 megawatt phase one of that will be coming on stream towards the end of this year, and do expect they should probably start booking the contribution in terms of the associate line of things by fourth quarter of this year. We've done a bit of analysis here in terms of the AIDC, 64 megawatts. If you assume that 80% of this is utilized on a 20-year basis lease and all that, IRR of about 12% and a 2.8 billion project cost, you're looking at an uplift in terms of the associate earnings of about 1 to 2% of overall TM's earnings. That basically works out to about a net value accretion in terms of the DCF side of things, about 16 cents a share. So I think this is something that the market will increasingly look at going forward. As you know, DC is still very much a strong buzzword in terms of the Malaysian side of things for telcos as for contractors. I think valuation-wise, if you look at the stock, it's trading at about 5 times EV/EBITDA forward 26 numbers. Still fairly attractive there, considering the fact that dividend yield is over 5%. This is a stock where balance sheet optimization will continue. Balance sheet is looking very healthy there. They've repaid a huge chunk of their USD bonds over the last 12 months. So interest financing charges should continue to fall. If you look at where the sector is in terms of valuation, it's about just over 9 times. So I think it's trading at a huge discount versus that of the average sector. The other thing to note is that ROIC is a key metric that the management continues to look at. That has been improving over the last couple of years, and we do think that the ROIC will continue to head north over the next couple of years as well. So still maintaining a buy call on the stock. This is a preferred pick in terms of the telecom sector. So the target price at 9.30. Okay, I'll stop here for now, and have a good weekend. We'll see you again next week. Morning, Kappa. Thank you.
Hi, Jeffrey. So sorry, I'll be the last speaker for today. Thank you. Thanks for the insightful session. All right. Hi, everyone. This is Vanessa from the RHB Warrants team. So just a quick one to let you know about there will be a bunch of warrants that's expiring very soon. With the expiry date on 27 July, but the last trading date will be on 23rd July. All right. So I'm just going to share with you the 5 things that you need to know about expiring warrants. Maybe you have it or you don't have it in the portfolio. Okay, first is the expiry date. You really need to know about the expiry date, but there's another thing called the last trading date that you really need to remember, which is actually 2 working days before the expiry date. All right, so that will be a last trading date. After that, it will be suspended and will not be able to trade anymore. All right, and number 2, you need to know about all this. Sensitivity and effective gearing will look very, very attractive to you sometimes. For example, SP Setia C1G, with the sensitivity of 2 ticks and effective gearing of 7 times, right, is actually a very, very tradable warrant if it's not very close to the expiry date. Right, so this is due to the time value that is depleting more and more and more. So then it left with purely either intrinsic value or no intrinsic value, or purely a little bit of time value only. So you'll be able to see a very attractive sensitivity and effective gearing, but don't fall into the trap because it's expiring very soon. Number 3 is that you will notice the gap between bid and ask price. So this is actually done by our beloved traders to make sure that you know that it's not worth it anymore to enter into the trade, because when there's a spread, you have to buy it at expensive ask price, and then if you want to sell it back to us or sell it back in the market, then the fair bid will be actually lower. Okay, the fair bid is still a fair bid, but it's just that the ask price is more expensive. Okay, so from this slide, you'll be able to see the very, not very, I mean, some widened spread as well. But this will be actually seen on the market when you see the bid and ask quotes in the market. Okay, yep, so there's actually 2 pages, so these are the names. I forgot the number 4 will be the moneyness of the warrant. Okay, so if you may not know yet, we will actually do a cash settlement to all expiring warrants. So at the end of the day, you won't be able to get any any shares. Unlike company warrants, you might be able to exercise it in a mother share, but for all structured warrants, the call warrants and put warrants, you will be only getting cash. But not all warrants you'll get cash, so you have to look at the moneyness of the warrants. So normally we will take 5 days average closing price that I will show you later. And then if it's for call warrants, if it's above the exercise price, so this tenaga exercise price is 14 ringgit. So if you take 5 days average, right, it's 14 and half, then you get money. But if at the end of the day it's only 13 ringgit and 90 cents, then you will not be able to get any money back. Yeah, so that is the cash settlement thing. All right, so look at the moneyness, but this moneyness is actually based on the previous closing price lah. So you still need to calculate on your own if you want to hold upon over the expiry date. Okay, so this page and this page, maybe I'll just bring your attention to GCB C35 and also Inari C4I and NetGate C6 as well. So NetGate C6, if you are like a super adventurous person, then you actually can see that NetGate C6, the sensitivity is like about 1 to 2 ticks, but the effective gearing is really great at 6 times. Yeah, but cannot trade because it's so close to the expiry. Okay, so number 5, this is the cash settlement formula that is applicable to RHP issued warrants. 5 days average closing minus exercise price divided by exercise ratio and how many units you have on hand. Okay, some other issuers, if you're buying if you're investing into their warrants, they might not be using the average closing price. Instead, they're using the VWAP. Yeah, so we have to read through the term sheet and all, and to make sure that you are getting this right lah. Yep, so only in the money warrants are eligible for cash settlement. Okay, so the formula is different, but if you have any questions, you can always call our hotline at this number, or maybe can just check with your dealers or advisors regarding the expiring warrants or to switch to newer warrants as alternative. All right, so that's all from us. That's all from us today. Thank you so much for dialing in, and we wish you a happy weekend and Monday. See you soon. Bye bye.